Howdy there, folks, and welcome into today's video. Hope everybody's doing great as always out there. Got quite a few subjects to get into today that I think are very important for every investor in the market to maybe either pay attention to or things that I think are important and stuff like that. And I know some subjects that folks have been wanting me to speak on. I'm going to speak on those in this video as well. Now, first off, just so you're aware, a little under the weather this weekend. Yesterday, I spent most of the day in bed. So, I don't know, maybe Rona. I don't know. I don't know. Okay, we'll see. But feeling a little better today. That's why I'm able to record this video, but definitely not back to full energy Jeremy, so don't think I fell into depression. No, just like, I got a little bit energy enough to do this video, but not like enough to get excited, okay? So first thing I want to talk about is, obviously a lot of people want to know my commentary about the Honest numbers, because Honest, HNST, which is one of the stocks I've been buying the most shares of the past probably 6 to 9 months. It's probably, certainly a top 3 stock for me in terms of shares. I've just been adding like an insane amount of the last 6 or 9 months. But yeah, they reported earnings on Friday. And basically analysts had projected, there's only 6 analysts that cover the stock or put out numbers at least. 6 analysts cover the stock and basically they had expected revenue to go down about 3.2% year over year. But Honest came in and they came through. Second quarter revenue grew 5%. So not only did it not go down, it went up, and a pretty respectable number of 5% there, right? Led by a 9% increase in diapers and wipes. Also, the company announced basically they're getting big distribution to Ulta, Walmart stores coming in the back half of this year, which is obviously going to boost up their numbers massively. If you go into a Walmart store right now, you're basically going to find no Honest products there. So the fact that they're going to get distribution basically on a national level with Walmart is absolutely massive. And something that is very important is they were talking about is they are not a brand that is super popular right now, at least in the South. They don't have a big presence down there, but Walmart dominates the South. Half of Walmart stores basically are kind of in the Southeast region. Let's just call it that. And so the fact that they're getting national distribution at the end of this year in Walmart is absolutely huge. And they were mentioning something like 42% of births happen in the Southeast. So I just thought that was something to be aware of. That is a pretty exciting opportunity. And obviously that's going to boost up Honest's numbers in the back half of this year and obviously in 2023 in a massive way, and obviously make the brand bigger, revenues better, everything better across the board. So that's good. Also, they reiterated revenue, but just about reiterated everything. They also adjusted, they updated their full year adjusted EBITDA outlook, which includes positive adjusted EBITDA expected in the fourth quarter. So that's a big step in the right direction. If we're talking about getting to profitability, the fact that they could this year hit a quarter that's going to be adjusted EBITDA positive, that's a big step in the right direction. Because then once you start talking about that, then you can start talking about on a GAAP basis, and then you can start talking about positive net income, and then you become a profit company, and then it's just beautiful because then all of a sudden you're seen as not just a revenue growth company, not just a company that's growing their brand, but also a profitable company, which is a massive thing, especially in CPG, because people in the CPG space, investors in the CPG space, consumer packaged goods, they're not used to usually investing in companies that are money losers on the bottom line. So an Honest can't be taken that serious until they're getting very, very close to profitability or start eking out some profitable quarters. That's when more investors can start looking at this one and taking a peek and things like that. So I'm really excited about that. I'm 100% confident they're on their way to becoming a giant in that industry. I see their growth, I see their market share they're taking from competitors, and I'm just super excited. So I think there's going to be a tremendous opportunity there. I'm a little frustrated myself though. I don't think I've actually, I own over 100,000 shares of Honest now at this point in time. I don't think I've bought nearly heavy enough. This stock hit $2. The $2 range just back in June. I don't think it's ever touching 2 again. I would be happy if it does touch 2 again. I hope it does. I don't think that's ever happening ever again. Now that these numbers have been reported, I think even if the market goes down, I don't think we're ever hitting 250 or anything close to that. So I'm a little mad at myself for not adding more aggressively. And, for I think most people, it would be a very aggressive ad to buy over 100,000 shares. I just think I should have done more, to be quite honest, because I don't think I'm seeing those type of prices ever again. And I think this stock's on its way to becoming a $20 plus stock over the next few years. And I'll be remembering I should have bought heavier at those 2 ranges, because that was just ridiculous at this point in time. So anyways, guys, yeah, really, really bullish on Honest. This is one of those few stocks I'm going to likely continue to buy. And I'm trying to cash up a little bit as the market just kind of climbs and climbs and climbs. That's a big thing I'm kind of doing right now, is just kind of putting income to cash right now rather than putting it straight in the market. But I couldn't resist. I bought $7,000 worth of Honest shares after those numbers came out. I'm like, they beat like that. They come in, reiterate things. They talk about, on an adjusted basis, having positive EBITDA in the fourth quarter. Things are all moving definitely in the right direction and probably at a little faster pace than I had anticipated. And so yeah, really, really excited there. But yeah, that's kind of what we're looking at as far as Honest goes there. Next thing up here, let's talk about the public count. This is over $1.4 million account. At the very peak, this was a $2 million account. So we got about $600,000 in get back. Let's just call it that, okay? And, I kind of want to spend a moment talking about these positions here, because I know there's a lot of stocks here I haven't talked about in a while, and so this is for everybody, that have been maybe looking for me to talk about some of these stocks, okay? So I'm going to start at the bottom. Voyager, I think I just keep that in my account just to remember the one that went BK. I've never been in a stock that went bankrupt before, but that's the one, okay? So I might just keep that one in there just to remember it as kind of like a RIP. Avant Brands doing a great job executing on their business model. Absolutely incredible. You look at their numbers. I mean, it's a 17-cent stock, and it's all, I understand like some people could just laugh it off as like, oh, it's a joke company, like 17 cents or something like that. Believe me, look at their numbers. They're not a joke. They're growing very nicely. It's a very small cap company, but I've been nothing but impressed. And at the end of the day, I think it has a tremendous opportunity, and I see Norton and the team doing a great job. The Chef, I talk about the Chef all the time, so I don't feel like I don't need to talk about that one. Obviously, as bullish as ever on the long term there. Corsair Gaming. I'm much more bullish on Corsair in the back half of this year, and obviously going into 2023. They're just, gaming's in a bad spot right now, to be quite frank, a bad spot. We just heard it by NVIDIA. NVIDIA just came out, what was it, last week, said they're going to miss their numbers by $1.4 billion based upon gaming weakness. And so gaming's just it kind of been in a very, very bad spot. I think there's a high probability that gaming starts, getting back going, let's just call it that, in the fall time. And so yeah, that's kind of my thought around that. We had to work through all those Rona numbers, which that was a tremendous amount to kind of work through there, where you had these insane comps year over year when everybody was forced to be home, and like gaming was super hot because everybody's forced to be home. So like, what are you going to do? Like, I guess you're going to game, right? So yeah, we had to work through all that. The good news is those days are coming to an end now, and the comps for Corsair just get easier and easier as these quarters continue to tick on here. So I love that. Honestly, I just spoke about that one. I honestly need to buy more shares, and I wish I would have already been buying more shares. The Planet, we're going to talk about the Planet in just a moment here. By the way, I need to have Fidelity combine these Planet shares with these Planet shares here. I don't know why they put those as two separate, but whatever. I'm going to need to contact them about that. Oatly's no jokely. Oatly, obviously, my biggest money losing company is Oatly, but they just have such a tremendous opportunity. I feel like they're going to be a drink giant and just a massive replacement in the dairy industry. Their growth is tremendous. They're growing not only huge in the United States, but also Europe and China as well. So, you're kind of getting three regions of massive, massive growth over. And, if you didn't know, because some people aren't actually aware of this, but cow milk is almost like non-existent in many parts of Asia, including China as well. So Oatly's opportunity actually in China could be much bigger than the United States, which is crazy to think, because I think about how much opportunity Oatly has over the next decade, 2 decades, just in the United States, and it actually pales in comparison to their opportunity in China, which is just amazing. They opened up a big facility last year in Shanghai, okay? Next up here, Meta. Meta is extremely confident in Meta. They're just going through, just kind of a disappointing time coming off those Rona numbers. Simultaneously, on top of that, the Apple iOS changes. So they've had to work through all this over the past year. And obviously it's made all their numbers look bad. It's just been a tough time for Meta's kind of business model in terms of showing those growth numbers. I think things get a lot easier as this year kind of progresses in the last couple quarters. And I think 2023, we're going to see very nice growth in Meta, regardless of a deeper recession or not a deeper recession. I look for Meta to show much stronger growth metrics than they showed this past year, just because they came off ridiculous comps, and that's just tough situation. Google, very similar situation to Meta, to be honest. They just haven't gotten hit as hard because Google's more established. They're seen as more of a safer play than like a Meta. And that's, you could argue either way on that one, right? Amazing's on a position. I just added kind of recently. It's already spiking up 20%. It's kind of no man's land for me right now. There's so many stocks that are down huge that I'm like, do I really want to add more Amazon when it's already up 20% from where I bought? So that's kind of just a hold for me right now. PayPal as well in this particular account is just a kind of a hold for me. This one's up now 21% there. So doing very well there. Palantir, we're going to speak a little bit more on Palantir in a moment in this video. Palantir is doing us very, very well. I should add more Palantir, to be quite honest. I've had time to run over their numbers again and again and again, and I remain bullish, for the long term of this company, and especially any shares under $10 specifically. I think I'm willing to pay up to maybe 12 for Palantir. But yeah, anything under 10 is very, very attractive. I think the risk reward there is pretty great. Great balance sheet of Palantir. They're growing. Did they miss numbers? Yes. But I would not call that quarter necessarily a disaster. Dropbox up 27%. That one's just a hold for me as of right now. They do a great job running their business model. The Planet, I told you we're going to talk about that a little later on in the video. Skyworks Solutions is obviously capitalizing big time from the 5G revolution that's going on right now. So yeah, Skyworks is just a hold for me. Revolve, man, I'll tell you. Revolve has been reporting such good numbers. I almost feel like I need to buy more shares of Revolve, which is a hard decision because it's up 162%. It's not easy to buy a stock when you're up that much on it. But the one thing that does a little scare me is Revolve basically telegraphed 3Q and 4Q and said they expect the year to continue to get worse. And as the year transpires, and their growth rates to get worse and worse as the year goes along. That's not good. And obviously, they also mentioned they have an inventory issue, as pretty much every retailer has an inventory issue right now. And we don't know, with all these retailers having inventory issues, in terms of too much inventory, is there big discounts? Does that hurt Revolve in the short term because people are getting all these discounts from other places? So I'm kind of trying to factor all that in and trying to figure out, do I want to buy more shares? Okay. So Tesla and Elf, I've sold the most of my shares in these two stocks over the past, let's call it year or two, and I regret every share I've ever sold of these stocks. Elf has just been a stock that has done us tremendous, but I think I own probably 9 times more shares, if not more than that, at one point of Elf in this particular account, and we just took profits and took profits and took profits, and I regret it because they're just tearing it up. I mean, their numbers are incredible, And I look at that one. I'm like, dang, man, I should have just stayed all the way in it instead of trying to cash out shares and those sorts of things. It's just, I think sometimes you learn those sorts of lessons. Tesla, my Tesla, same exact thing. I've sold most of my Tesla shares over the past year. This is all I got left now at Tesla is 500 shares. And, the thing that's tough for me with Tesla is, the company's done way better than I anticipated. I thought I had Tesla, when I was investing in it back in the day, I had Tesla pegged for about a $500 billion market cap in like 2028, 2029. They've already reached over $1 trillion at a couple points now at this point in time. So that's what makes things tough for me. They've gotten way ahead on net income than I thought they would be, EPS, margins, everything. And so that puts me in a tough situation where I'm like, oh my gosh, man, am I making mistakes here? Because, and I kind of feel like that. I kind of feel like, I wish I had all my shares I once had of this bad boy, but, it is what it is. For these ones, I'm just holding and just kind of doing that thing. And, so, it's been a tremendous, 2019, 2020, 2021 in this account were absolutely insane. The amount of profits we booked in this account is ridiculous. Like, it's probably over $500,000 in profits between all the profits taken over the years and dividends received. It's a tremendous number. It's huge. The account's been doing absolutely phenomenal. Recently, obviously, it's gotten hit by the whole small cap kind of dealio, but those stocks will all come back, in my opinion, and will be off to the moon eventually over time here. Okay. Now, I'm going to speak about something. Somebody posted this. One of our members inside the private group had posted this in the, I think it was Market Chat. And I saw this and I just thought it was interesting. So this person says, RIP to all the tourists and traders who use voodoo and beads and prayer and charts and macro to turn bearish in the market at the bottom in mid-June. You really hate to see it. It happens over and over again. Michael Burry, if you didn't know, this is Michael Burry's account here. Michael Burry says, NASDAQ now up 23% off its low. Congratulations. We now have the average bear market rally across 26 26 bear market rallies from 1929 to 1932 and 2000 through 2002. The average is 23%. After 2000, there were two 40% plus bear market rallies and one 50% plus rally from the market bottom. And I said, man, if I had Twitter, which I don't, but if I did, and I responded, this would be my response. Okay, I would say, congratulations, the NASDAQ is up 2,000% the past 30 years. The NASDAQ's up 600% the past 20 years. NASDAQ is up over 300% the past 10 years, Mr. Burry. So, and it's just kind of like you can cherry pick numbers, right? You can cherry pick numbers and say, oh, this is that and this is that. And it's just like, when you look at a little bit bigger picture, that is what it is. Now, obviously, he's kind of in the right there because what he says is factual, right? So we're both kind of in the right. It's just he's cherry picking numbers. When you just zoom out a little bit, it's a very difficult thing. And here's the thing, okay? People think they can do what Michael Burry tries to do, which is like short stocks and short the market. Oh my gosh, man. You want to talk about losses on losses? It's such a nearly impossible game to play, that whole shorting thing, because we know where's the market go most years? 7 out of 10 years, if not 8 out of 10 years, the market's going to go up. Some of those years are going to go up massively. And, you're trying to short and navigate through these things. And sometimes you feel like there's going to be a bunch more bad news coming, but the market's already moving up. So then you're like, do I cover my short now? Or is this just a bear market rally, right? And then my gosh, it's so much more difficult than I think it looks. And, Michael Burry's trying to be right in the whole situation. And who knows how it all shakes out. But it's just so much easier to be a long. It just is. Ask anybody who knows anything about the market. It's just so much easier to be a long. Buy 10 of your favorite stocks for the long term. If they go down a bunch and you still love the business model and you believe in it, invest more in the stock and just build out your portfolio that way, rather than trying to short and get in and out and in and out. And I got to cover now. Oh, I got to reshort. It's like, geez, man, that's a tough thing. This was posted in the private stock group. I thought this was interesting. And I didn't even aware that Canopy's lost this much money. Canopy has lost almost $6 billion since 2015. That's what? I was like, what? Okay, like Tesla lost a ridiculous amount of money for a long time. And, they were definitely a money furnace for quite some time. That's a whole new level. I was like, what? That's just like crazy that company of such a small scale compared to something like obviously a Tesla, Tesla, lost that much money since 2015. Incredible number, man. That's just ridiculous. Okay. Absolutely ridiculous, okay? No, these were posted in the Planet chat. I thought this was very interesting. And by the way, if you're ever looking to join my private stock group in the private Discord chat and get access to all the course curriculums and things like that, check out the pinned comment and you can apply for that down there. But, we always have boots on the ground, all different places, and I love, that the members in there post different stuff. We had somebody post some videos from inside the Planet location yesterday, and I mean, it looked booming. That's all I'm going to say. I was very happy to see that because, back in the springtime, I'd go by the Planet location and I felt like it was kind of slowish. And I was like, oh man, like it feels slow. But yeah, it is definitely seems fairly busy now. Let's just put it that way based upon some of the pictures and videos I'm kind of seeing out there. This was an Orange County location. One of my favorite people inside the private stock group posted this one. And this is interesting. They said, 22 vehicles, 2 people per vehicle, constantly driving in and out. There are people parking on the side, so I really do not know how many people, but at least 44 people inside, plus 2 out of 6 trucks making deliveries, maybe to the beach. You don't know because that store's in Orange County, so they could be going out of Newport, Huntington. You never really know where they're headed to people's houses or whatever, right? So yeah, it's great to see that Orange County store really starting to, let's just call it ramp up. There was a very slow first half of the first year for the Planet location OC, and everybody kind of, I feel like, gave up on that location, but you don't want to give up on it too soon. That's all I'm going to say about it. And the reason being is the first year of the Vegas location was very slow. The Vegas location didn't really start popping and doing big numbers till really like the second and third year. That's when all of a sudden everybody started to recognize, oh boy, this is like a busy place and this is like doing good. And so I watched the Orange County store be very slow that kind of first year. And I was like, let's just kind of see how things play out here. Let's not jump the gun. Let's just wait on this, okay? And now we're clearly starting to see a little ramp up in activity in Orange County. And hopefully we continue to see that over the next year or two. I just think it was maybe a little premature for people to give up on that right away. Like, oh, it's not busy. When I worked at my old place I used to work at, okay, where I was a manager at, I don't want to mention the name here, okay, because of what I'm about to say, and this was kind of internal information. But basically at that place, When we opened a store, we expected to lose money the first 3 years, okay? And so that is just some food for thought. And that company I used to work for was one of the best, if not the best retailer in the United States of America, and the amount of profit we made in that industry, and, paying basically double to triple the salaries of basically everybody that was our competitor, like just a ridiculous business model that we just, outcompeted everybody, and it wasn't even close, right? And we expected to lose money the first 3 years of opening a location. Like, that's just some food for thought on, kind of trying to give up on things a little too soon, especially when you got a management team that has proven what the Planet's management team. Let's not forget, people thought the Planet was going under in not the great financial crisis, in Rona. They thought when that was announced, they're like, a company's done. It's going to zero. And a year later, not even a year later, 6 months later, 9 months later, the numbers were ridiculous that were coming out of that company. It's like, oh no, they're not going bankrupt. They're actually tearing it up as far as numbers go. So just kind of some food for thought there. I'm reevaluating and trying to figure out if I want to just continue to hold my shares or if I want to buy more shares. Right now, I've just been holding. I haven't really actively bought any Planet recently, but definitely I'm starting to look at some of these pictures and videos and stuff, and I'm like, might want to just buy a few more shares. I've been kind of trying to wait in the whole Florida situation because they're expanding to Florida. I really want to see kind of what happens there as far as Florida goes, okay? Palantir, if you guys don't know, Palantir is obviously a very popular stock on YouTube, and I think there's a good level of conversation going around Palantir right now that's really healthy for the entire investment community. Regardless if you care about Palantir stock or not, I think it's a great learning moment kind of for investors, and especially that are on the YouTube platform. So I put out a video a couple days ago on my new channel called Jeremy Lefebvre Makes Money. I know, it's not original, okay? Like, when you created so many YouTube channels over the years, you start to run out of ideas. So, and by the way, thank you for all the subscribers over there, like 6,000 freaking subscribers already. We only put out 13 videos, like that's insane. So thank you to everybody that's already joined over there. But I put out a video where I reacted to another YouTuber that sold their Palantir stock. And, I reacted to that video because this is just a straight reaction channel where I react to other folks' videos and perspectives and things like that. And I just think it's an important video to check out. Regardless if you care about Palantir stock or not, I think you're going to learn a few things from that. And I also want to shout out this video. And somebody in the private stock group, a member in there, posted this video from a channel called Palantrillion. And this is a really good video as well. So definitely check out that one. And it goes into kind of your expectations around a stock and maybe getting a little too excited about expectations and then maybe getting very disappointed if your particular expectations are not hit versus what a company puts out. So I just thought that was a good video to check out there as well. And, like I said, I think it's just a good moment for YouTube to kind of learn from this and kind of figure out, going forward, the best routes to kind of go about things and whatnot. So definitely check out that video as well. Hope you guys enjoyed this as always. I'm doing all right. Hopefully I feel even better tomorrow on Monday. I appreciate you guys joining me. If you're motivated to scale your portfolio to 6, 7, and 8 figures and get access to our private Discord chat, access to all my courses, and understand financial statements on a very high level, check out the pinned comment down there and see if we can get you inside the private stock group with us. Much love as always, and have a great day.